Oh, for Pete's sake. Okay. I believe you guys should be able to see my screen, hear my voice, and see my face. Crispin, hello. Court, hello. And good afternoon to everybody. Thanks for being here. Let me just again do a quadruple sound check, both on Facebook and YouTube. Make sure we got it on both. That would be charts, camera, and audio. Okay. So thanks for being here, guys and gals. For those of you who don't know, my name is Joe Rokop, and I am the Managing Director of Commodities and Equities here at Simpler Trading. Today is February 25th, 2021, Thursday, but for the sake of discussion, let's say Friday, 3:04 p.m. CT. And this afternoon, I'm going to take some time and go over what's happening in the world of futures, walk you through some of the trades I have done recently, some of the trades I posted with the Simpler Trading Futures room. So you guys have an idea of what's in store over there if you want to take a free trial and just kind of go over my system. So what you see on your screen right now is Tradeovate, and that is a software platform developed by TopStep. TopStep is a company that we partner with, and what they do is offer you a trading combine. So for those of you who are new to futures, you can get a class with me, yours truly. And then with that class is a combine for a $150,000 trading account. And just real quickly, what that means is they give you sim money, 150 grand. If you make $9,000, you move on to step 2. If you do it again in step 2, then you now have a real live funded account. So I did a class on that, teaching and explaining how I've passed that account. I'll show you real quick. So I've got a step 2 account that I just passed. There's one. I have another step 2 account that I just passed. There's 2. And I have a third step 2 account. So of late, I just passed the 150K combine for the billionth time. So just to kind of show you, put my money where my mouth is. So there are, I'm 3 for 3. Granted, market conditions have fit the strategy quite well of late, but that's what you're looking at right here. Now we have a chart for the ES, or the S&P 500. Here's a chart for the YM, which is the Dow Jones. On the right, upper right, is the NQ, or the NASDAQ. Lower left is the RTY, or the Russell. Lower center is CL for crude, and lower right is GC for gold. So I'm trading the futures in these 6 contracts. I have determined over the years, over the last 15 years since I've been doing this, I've got a professional background where I did this both from a prop shop, proprietary, and also on the commercial side. So a little bit, depending on how it looks, somewhat of a, let's see, 1 second, always allow. Okay. Again, from a professional side, so I'll bring somewhat of a unique viewpoint to you folks from a trading education standpoint. So again, feel free to pepper me with questions along the way, and I will do my best to get to said questions in a timely manner. If I'm unable, I will put them in the queue, and we'll get back to them next time I'm on the mic, or if you join the futures room, you can get to me there. So anyways, let's go over some trades from earlier. Okay. Let's see. So yesterday we took, and this is, so these are trades that I sent out to the room, the futures room, so everyone gets alerts saying sell here as an entry point, and then buy here and here as your exit point, and here's your stop loss. So that way, if you go back and look, if you're part of the futures room, go back and look. Here you are. Now, the entry price on this, we sold 3 lots in the ES, S&P 500, with 7 points of risk for a total risk of $1,000. Now, if you want to have less risk, and that's a little bit too chunky for you, no problem, right? All you have to do is trade the micro contract. These are 1 lots with the mini contracts. Okay, these are 1 lot with the mini contracts. So if you want a little bit less risk, no problem. We've got you covered. All you have to do is trade the mini. Okay. We sold here at 73. We scaled out at 68.5, 62.5, 57.5. That trade, we entered that trade at 8:30, and I believe we were out by about 8:37. So in 7 minutes, our total profit on that was $1,600. Had you been doing that with the micros, it would have been 1/10 of that, and you would have made $160. Okay. Next trade, here we go. This was entered into at 8:44 a.m. Okay. We sold 2 at 38.67. We covered at 63.5, 61. We sold 1 back out at 71.5, covered at 56.5, 64.5 for another profit at 1.1 thousand. Right? We kept on going. Trade 3 was 2.8, 2.7 thousand. Trade 4 was a scratch. Lost $20. Trade 5 was small, lost $200, and then trade 6 was $4.1 thousand. Okay, that was with a 2 lot, which requires $2,000 in margin. Okay, and so that's not only doubling your margin, but that's also doubling your risk, right, for a 200% return. So that was a nice, enjoyable trade. So Net all in all, yesterday, that was $9.3 thousand worth of signals that were all sent out to the futures trading room. So I'll be doing a service similar to that coming up at the end of March. Then that's where all of those alerts will go out to as well. Okay. So if you're interested in just getting those alerts, right, so you can follow along, certainly fine to wait for the alert service to be launched, or take a trial in futures, see how that goes for you, and then go from there, right? And then just see how you do. So lots of options for you, whatever works. Yeah, whatever works for you, right? Whatever fits your style. You are not obligated to be sitting in front of the computer for all this stuff, right? Absolutely not obligated. And you can just take the alerts when you are ready. Okay, so now let's take a look at what we saw today. And one of the things I always say is that I am not smarter than the market. Okay, today was a downtrending market. I'm not going to consistently come in and say, I'm smarter than the market and it's going to turn and it's going to go back up. Okay. For one, the market is an inanimate being and does not have intelligence, right? It just does what people tell it to do. And people were saying, we're going lower. Right? People were saying we're going lower. So I'm also not smarter than everybody else. Right? But I'm better than them. And so are you in terms of our abilities and our experience, right? So that's the knowledge I'm here to impart on you, is what to do when the market is breaking and you are like, what in the heck is going on? I can't do this. I can't trade with this. Things are moving. It's crazy. It's bananas. Well, the volume breakout system, that's how you do it, right? And you sell the market when it's breaking and buy the market when it's railing. It's that simple. Okay. Now, how do you know? Okay. What tips you off? Okay. And looking at this chart we have right here, let me expand one of these and I'll focus on the S&P first and foremost. Okay. So hold on a second. Okay. So the blue line you see on this main chart, okay, that is the VWAP, or volume weighted average, okay, which is essentially a mean, right? A lagging mean. Now we also have an exponential moving average, which moves faster and more tightly, and that is a 10 EMA. And then we have a slow moving average, which is a 50, or vice versa, a 10 and a 50, okay? And we use the EMAs as crosses. So when the fast crosses under the slow, we go short. When the fast crosses under the slow, we go short, and so on and so forth, okay? And I have, again, as I mentioned, when we make a new low, sell 2 points under that. Once the risk is covered, move the stop loss to break even. Okay. Did that again here and then got stopped out. Well, actually, let's start from the beginning. Okay, 9 o'clock, new low. Sell a new low, 7-point risk. Market breaks, bring that stop into break even, stopped out for a scratch. Same thing here. Sell the market when it makes new low. Market breaks, market breaks, market breaks. Move that stop in, move that stop in, stopped out for a small win. Do it again here, right? Market breaks, move that stop into break even, and boom, it goes, right? So we fouled the pitch off here, made a little bit of cash, took a swing here and hit a single that up, turns out it's a double, up, turns out it's triple, up, turns out it's a home run, up, turns out it's a grand slam, right? So the strategy has, a hit ratio or a percentage of time that it's going to win or be profitable, right? And the profitability, of course, needs to be higher than the losses. If the hit ratio is less than 50%, meaning if half of your trades are wins and half of them are losses, those wins have to sum up to a larger amount in order for your profit to be, or in order for your P&L to be a profit, right? I mean, that's just arithmetic, right? 2 plus 2 minus 2 minus 3 is -1. We want it to be the other way around. But the point being is that with the strategy, you can make some trades, right? You can do it in any direction. You can do it at any time of day. And if you just follow along and you learn the system, then you can catch some of these pretty big profits, right? Now, there is that saying, don't mess with the bull market, right? Don't mess with the bull market. And we have been riding this thing for months, right? So, well, why? And the question is, why was I selling today? Well, all of the technical indicators were firing red. Short squeeze, short squeeze, short squeeze, short squeeze, right? So not only did we identify a downside breakout, we call that a runaway signal. Not only did we identify a runaway signal, we also identified a short squeeze. So if people are squeezing out the longs and we have a downside move formulating and then firing into a signal based off of the system and strategy, and then on top of that, let me pull up the newsletter. On top of that, we have one of these big horseshoes to fill, right? So when we're trading up here, it might be a little tough to see. But in the newsletter that I send out, I post these HVAs, or high volume areas, right? And you can see from a price of 39.07, there's a nice big horseshoe all the way down to 38.57. And then there's another horseshoe down to 3,800. So let's take a look at what the market did. Okay, so once the market broke 39.07, it filled that horseshoe down to 38.50 and eventually turned back around, thus completing that move. Okay. Now, this was sent out on Wednesday morning, so we didn't go back and adjust these lines after it happened. But that big support level we have here, where the HVA sticks out the furthest, is 3,840. It traded through that by a few points, 5-10 points, and then came on back up. So we were able to catch a move from 3,907 all the way down to 3,840, scaling out with one at 3,857. So for the sake of discussion, we sold 910s, we bought 860s, 840s, and then our third trailing stop got taken out when it reverted back up after it turned. So our third and final lot was going to be down here at 805, right? 3,805. Now this only got to 3,820 and then it turned. So we got stopped out on our third lot. So our scale levels were 1, 2, and 3. Unfortunately for us, it just got to the bottom of this HVA node and then turned back up, right? So how much is that worth, right? Well, let's go ahead and plug these numbers in. So if we sell 3 lots at 39,007 or 30,007.5, we cover our first one at 38.60. We cover our second one at 38.40, and then we get stopped out of our third at 38.45. Okay. There you go. Nice little profit right there. Okay. Nice little profit. And arguably, I'd say big profit, right? $9,000 by following these systems. Now, let's say again, this wasn't your style, or the risk was too chunky. So the risk on this was 7.5 points. Okay. And the stop loss is 39.15. So our risk point, 7.5. So risk dollars equals our number of points times $50 a point times 3 lots, 1,100. So we risk 1,100 to make 8,800. So that's a 1 to 8 risk reward. That is about as good as it gets. To have a trade that's so high, I mean, that's a 800% return on your cash from a trade that was initiated from that sell level here. And depending on which signal you took, that pop back up, or let's say you took that drop down here. Let's say you entered at 04 half, right? That might be a little bit more because that's when that new low was made. Okay, that's that overall trade. Okay, now if you were in and out, as I mentioned with that previous, where you sell the breakout, sell the breakout, sell the breakout, there's a lot of different ways to do this, right? So if you're trading on that short time frame, okay, then of course, you're going to be in and out a little more as it goes down. If you want to just put the trade on and walk away, you would do it in this fashion, right? Now, you want to be selling underneath support. So the support that I showed you on the HVA is 3,907. So you want to be selling a little underneath that. So we'd sell 04s. Our support level is 3,857 right here. So we'll buy a couple points above that. And the next support level is 3,840. So we buy a couple points above that. And then when you get stopped out on your trail above that HVA. Okay, so that's kind of how that works. Now, again, you can be more active and more protective of your profits, or you can kind of step away, hands off, and let it run. So it's totally up to you what style you want to do. Okay. And fortunately for us and everybody, this strategy works on short-term time frames, moderate time frames, and long-term time frames. So I will leave you guys with that. Okay, I will leave you with that. I am back on the mic tomorrow morning at 8:20. Okay, and we'll be looking to take more trades like this, more signals like this, and the alerts will be going out quite clearly. Okay, so just let me show you the format here. It's buy to NQ here, sell it here, and here's your stop loss. It's that simple. Okay. All you have to do is buy when I give a buy alert, place your targets and your stop, and that's that. So if you're interested in joining us in the futures room, definitely do. You know what? I'm so sorry, guys and gals. I missed these questions. Okay, so let me get to those. Can you repeat the platform? It's called Tradeovate through a company called Top Step. And it's a free, very light web-based platform. This spreadsheet is a personal spreadsheet available at this moment. Oh, so we got an answer there. Okay. You know, we've got a lot of questions about that, so we may look to turn this into a product that is available for customers, but at the moment, this is just an internal thing that I use for myself. But again, we are looking to perhaps turn that into a product for you folks. So if I don't see you tomorrow, I'll see you next week I'll see you next week on Tuesday. And then I'll see you every other Monday morning as well. So with that, I hope everyone has a great day. Lots of love. And as always, have a profitable day.